as I'd expect, because I know your story as much as you know mine, how you came from nothing.
Yeah, it's true. Your dad was an insurance salesman. You ate dinner with him every night. My dad was gonzo. I ate dinner wherever I could.
And yet you were still in the wealthiest state and the wealthiest country in the world, with access to the best health care, schools, infrastructure. And you were born white and male. At a time, that was a huge advantage in the greatest capital market in the history of mankind. The roads were paved for you, Bobby, which is why you were able to move so quickly across them.
Wow. I knew you were racked with guilt, but this takes it to a whole different level. Sure, the roads were paved, but I didn't even have a goddamn car. Now, you see, this is where we are different. I don't pretend I'm an ordinary guy got lucky. I am a monster. A carnivorous fucking monster. It was success or oblivion for me, just as it was for you, whether you want to admit it here or not. See, that's what all this is for you, a way to forget you are that monster. You have to be one, or you could never have gotten here in the first place.
See? Don't bring that weak shit our way.
Not over yet.
Maybe you're right.
Hi everybody, it's Monday, April 28, 2025. Let's get started. This is the monthly time frame, weekly, daily, 4 hour, hourly, 15 minutes. On 15 minutes, as usually, you want to see the midnight opening price. 5, 3, 2, 1. Here what we have. Relative equal lows. First of all, equal lows were taken. Then we have formed relative equal lows. It's being taken. Then you have the bullish order block over here. And pay attention to the time, 1:30. And you take projections from the lowest point to the highest point. And look, what kind of liquidity we have there? That's right. Relative equal highs. Together with 4 standard deviation. But at the very beginning, we're just going for 2 standard deviation, nothing fancy, okay? This is how it looks in terms of risk reward, 1 to 2. If you were getting your position at the 3 ticks above the opening price of the order block. And this is 1 to 4 if you get your position all the way to 4 standard deviation. And the other thing, let me show you 30-second time frame. Look, the inversion fair value gap inside that order block. Look how price comes back inside in here and delivers just like a rocket, huh? So the high of that box is 19,300 and the entry also 3 ticks above. And in this case, once you have consequent encroachment of this is a little bit more advanced stuff, but slowly I'll teach you something. Once you have consequent encroachment, it's confirmed, meaning price didn't close below it, and then you again have high being taken from where the delivery was towards the consequent encroachment, and then you can be entering from this inversion fair value gap and already put the stop here. You could make it even lower, but to be safe, let's say, put it here. And look, now if you go for 2 standard deviation, that's 1 to 289, and if you go 4 standard deviation, that's 5.54. This is how I get my trades 1 to 8, 1 to 7, whatever. And like again, if I really were trading the situation like this, in this case, I would put my stop loss here at the consequent encroachment. Since the bodies already were taken here, so I'm looking on this candle consequent encroachment. This is where would be my stop loss, like this. Like this. And yeah, this is the real application. This is what I was talking about when I get my trades 1 to 6, 1 to 7. This is what I do, how I manage my risk and how I do everything. So hopefully you found this insightful, and until talk to you next time, be well, all the best, and take care. Wow, what you just learned here could change the whole approach to trading. Are you ready to take the next step? Your next big insight is just one click away.